This is Eric Mwatha with Mwatha.com market analysis for the week of September 18th, 2011. We see the Dow closing at the end of the Friday options expiration day up 0.66% for the day, and what was a nice week for the bulls the week of September the 11th. Anyway, so we see that S&P 500 was called up about 5.35%, which is a nice move for 1 week, which brings the S&P 500 to its declining 10-week moving average right there. So there should be some natural resistance around there or in that area. Also happens to be an area, if you follow this line here, which was the market turned bullish once it moved above those levels last November. We broke down sometime in July below that line, so we've worked our way back and we are now on the underside of this area. So the bulls would like this market to push above that to confirm that it has the power to move higher, and if you're bearish, you'd like to see this market stall right there on that line, which is where it closed at for the week. And that's the scenario. As we push higher, the bulls have a reason to have conviction, and if we turn around here, the bears will also have a reason for renewed enthusiasm for a market that wants to go down if those resistance levels hold. Now if you take a look at the same scenario on the Nasdaq, again above this yellow shaded area, the market should be bullish as far as the Nasdaq is concerned. We have also come to an area now we are hitting the 50-day moving average, which is right there. So we are slightly above the 50-day moving average right there, and we have a declining 150-day moving average, which should be resistance somewhere around there should the market move higher over the next couple of days. So above the yellow shaded area, the market is playing the upside, and if it stalls around there, if it stalls back below the yellow shaded area, then we see a reason for the market to come and potentially test these lows of August 2011, which is possible because Europe has already broke down below those lows of August, even though it recovered by the end of this week. Now again, here is the Nasdaq. Pretty much again, we are back at the Nasdaq. Had a nice 6% gain for the week. You'll also notice that its RSI also came very close to moving above 50, so it has a chance next week or this week of September 18th for the market. Should this move above 50, and it's something to watch, if it market moves above 50 on a weekly RSI on the Nasdaq, then that's going to confirm that the market is going to have another strong week. And also that might make sense because it might push this RSI to this declining line here, so that it makes sense that the bulls might want the market to move above 50, and also which will bring it to this declining area here on the RSI on a weekly time frame. So there is that upside potential for the market to do that, move above 50 and then hit this line here before it tries to reverse like it did sometime in July. Okay, also notice that we have a lot of declining top lines here, so this market needs to hold around here and see whether it can move higher. Otherwise, any stall around here is really going to be one where the market, any stalling around this moving average is going to confirm that the market has found resistance and probably going to be working its way lower. So we need to see how it responds now that it's back to an area where we should see natural resistance, and also we'll see that the RSI could probably move above 50. Now one of the reasons why the market has been holding on to its gains the last couple of days is quite frankly because we see that the MACD timeframes have not been able to push the market back above the zero area. So as long as this the MACDs remain above the zero area in this market here, as long as they remain above this area, above the zero area, don't expect the market to be going down. But should we at some point next week see this market move below zero on the 50 on the hourly charts and on the 30-minute chart, then the market is going to be going down. For now, the bulls have the upper hand, just because they are not seeing the MACDs move below zero. Same scenario here. We take a look at the New York Stock Exchange hourly chart. Again, the market stayed pretty much strong the last couple of days because the MACDs are way above the zero area, and so it's only until they break below this zero area here on both MACD time frames that you expect the market to go lower. But for now, as long as the hourly MACDs on all charts are, so the only way this market is gonna lose its strength is you'll need the hourly MACDs to move back below zero. As long as they are above zero, expect the market to be very strong and holding on to its gain even after intraday sell-offs. Now let's take a look at the QQQ, and we've been talking about this yellow shaded area as far as the technology sector of the market was concerned. Anything above this yellow shaded area was bullish, and once we moved above that, this market has been had a 2, 3, 4 days of a straight up move, and that makes a lot of sense just because this area here is where we were expecting was the line on the sand as far as the technicals were concerned. Above this yellow shaded area, the market was poised to be strong, which it has been, and below that it was gonna be bearish. So now we've come to back to an area of the 200-day moving average, which is somewhere around there. So we'll see how it responds. Now remember, we have a declining 50-day moving average, so one might want to start looking for a reversal here to the downside. How much lower, we'll see when the market comes and bounces off this. If there's a sell-off, how the market is going to respond to this yellow shaded area is going to tell us a lot. If it bounces and moves higher, that's bullish. If it cracks and can't defend this yellow shaded area, then we look for the market to test these lows here about 50 on the QQQ. Now if we take a look at the RSI on an hourly chart here, take a look at the RSI, you'll notice that now we are on this area here. This line connects these lows of January and the lows of July to a straight line. You'll come now, the market on the hourly, on the daily for the QQQ, we are back at this level of resistance. So I would not be surprised to see if we find that the market can't move above that, then that's going to confirm that the market has seen highs, short-term highs for the month of September. Now same scenario here with the airline index. Pretty much all the charts show the same thing. You have one of the weakest sectors of the market, which peaked out actually November of 2010. So it's been making fresh 52-week lows for a while, and we see the airline index had a nice run early this week, 2-3 days of straight gains, and it stalled exactly, or is closing exactly at the declining 50-day moving average. So we'll see what happens around there. The bulls will obviously want to see this thing move above the 50-day moving average, and if you're bearish, you want to look for an area where this market stalls around the 50-day moving average. Now let's introduce the RSI. You'll notice that the RSI is showing this red line represents an area where this market broke down, which was somewhere around there, where the market broke down to fresh 52-week lows. So now we are back to this level here again. So one might expect to find turnaround in the market to the downside given this chart by itself. If it breaks out above the red line, then it's bullish, but if it cannot move above this red line here, then one might expect this airline index to have found the highs short term. Now the airline index on a 60-minute chart, and we see here we're pretty much trading in a range, been bouncing off these levels here. This here, now we can say on hindsight, was a trap because it was below this line, and now one has to wonder where the market closed around this level here, market closing above this level here, above this somewhere around there. One wonders whether that is now also a trap. I would lean towards that, just because as far as I can tell, the MACDs have already turned around right there. and because the MACDs have turned around and one of the MACD time frames is just about to move below zero, I would say we've probably seen a scenario where this is actually a trap. This area here above the black line is not showing a conviction. Now on the other hand, if it breaks out above this area, then that's going to be very bullish for the bulls.